councils choose not to pay Eskom. On legal separation, the other major important strategic initiative that we have, we were regrettably unable to make as much progress as we would have liked to. We had targeted operationalization of the transmission business by April 2023. This, unfortunately, now needs to be moved out because we have faced significant delays in external decisions, including the appointment of a board for the National Transmission Company South Africa, certain licenses and approvals, and these have made it impossible for us to achieve the desired for implementation date of legal separation. Just again to emphasize, legal separation is a key enabler of increased investment in generation and is therefore a critical enabler to resolving the generation capacity shortfall that will help us to end load shedding sustainably. So delays faced in this process really are of great concern to us. The outlook for the end of the current financial year, 22-23, can all participants please mute? Please mute all participants. Thank you. The forecast net loss after tax is anticipated to be 20.1 billion, and this is due to a decline in sales volumes, higher maintenance spend, as well as higher spend on open cycle gas turbines and fuel oil due to continued low energy availability factor and poor performance from our generation division. Next slide, please. So talking about the generation plant performance, we have seen significantly higher planned maintenance. Of course, the more planned maintenance we do, the lower the EAF. The way that EAF is calculated, we deduct planned maintenance from the energy availability factor. However, as management, we have been firm in continuing to carry out planned maintenance. We believe that this is the only way to sustainably restore some semblance of reliability to our coal fleet, and we are continuing to allocate capital, resources and time to this very important initiative. The continued use of our gas turbines and the associated consumption of diesel is a cause of concern at just under 15 billion rands worth of diesel. Again, this is not a sustainable way to generate electricity, particularly because the allowance made by NERSA for diesel consumed by our peaking plants is significantly below this number, which means that the balance has to be funded through internal savings. We unfortunately again have to report as part of the year under review the hydrogen explosion that took place at Medupi Unit 4 on the 8th of August of 2021. That unit is being repaired and is anticipated to return to service by August of next year. We are engaged with the OEM of this unit, General Electric, and they have been most helpful in trying to expedite the resolution of this particular repair project, and we are looking at all options in order to expedite the return to service of Medupi Unit 4. We were able to reduce our coal inventories. Now, we have remained within our grid code, so this is not a source for concern, but it does point to improved inventory management, and it shows that we are trying to unlock as much cash as we can from internal resources. Similar exercises have also taken place in our transmission and distribution businesses, where we have released cash from inventories. A similar exercise is taking place in our generation business, where unfortunately we are confounded by a lack of poor inventory control and significant resistance to the implementation of inventory control measures, including barcoding. As I've said, our network and new build business continue to do well. Transmission and distribution, Medupi 1 achieved commercial operation, and the way, of course, that we brought these units online was that Medupi 1 was the last unit, and Unit 4 was synchronized to the grid exactly a year ago today, and that unit today is running very well, consistently at about 720 megawatts. The boiler modifications were completed at all 6 Medupi units, also on Kusile units 1 to 4. Kusile unit 5 was delayed by a year due to a gas air heater fire earlier this year. We anticipate that we should be able to return that unit to being synchronized to the grid by August or September of next year. And of course, this further exacerbates the generation capacity shortfall that we anticipate for calendar 2023. We are continuing to improve the strength of our grid by installing batteries. And then lastly, we are complying with the World Bank loan conditions for the Medupi FGD, and that work is continuing. As far as the graph in the middle is concerned, I do wish to point out the fact that the brown bars are an indication of how hard we are running our coal plant. This is the energy utilization factor. And as you can see, the energy availability factor is going down. So think of the energy availability factor as the speedometer on your car, and the energy utilization factor as the rev counter on the car. And as the speed drops, we are pushing the rev counter more and more into the red. And this clearly points to the urgent need, as we have been saying consistently for the past 3 years, to add between 4 to 6 gigawatts of new capacity to the grid on an expedited and urgent basis. Next slide. From an environmental perspective, we did see improved compliance, particularly with regard to particulate emissions. However, Duva, Kendal, Letabo, Matimba, Matla, and Tutuka continued to perform quite poorly due to unacceptably low coal quality, and also as a consequence of the coal quality, in particular dust handling plants that did not do their job of preventing, limiting as much as the reductions in emissions as we would have liked. We are continuing to engage with Minister Creasy at DFFE to ensure that there's a transparent process to consider Eskom's appeal in terms of complying with the minimum emission standards. As you may be aware, if we have to comply, as we were supposed to from April of this year, which of course was suspended by our appeal, we would have to retire immediately about 16 gigawatts of generation capacity, and that would have created a very large shortfall in generation capacity. Our water consumption remains very high. Coal generation is a very thirsty technology. Just to again point out that if we implement our 2035 strategy, we will be able to release, through the shutting down of 22 gigawatts of coal-fired capacity, sufficient water, some 40 billion liters of water a year, to provide 220 liters of water per day to 200 million people, 3 times the current population of South Africa. So in order to head off the predicted mega droughts that are in the offing due to highly likely forecasts on the basis of climate change, the reduction in our water intensity and bringing about a step change in that regard is going to be very important indeed. It pains us to report that we recorded 4 employee and 2 contractor fatalities. We express our condolences to the next of kin of those who passed during the course of service to Eskom, and we have consistently, as a management team, re-emphasized our efforts and redoubled our attempts to instill a safety culture. Consequently, we saw that our lost time injury rate came in at 0.24, which is still a very, very good number. But obviously, as long as there's a single fatality, it means that we have not achieved our safety objective, and we therefore are very regretful that these tragic incidents have occurred. We have improved our racial and gender equity, reports to the contrary notwithstanding, and we have consistently managed to drive both racial and gender equity at particularly professional and middle management level, where we are now sitting at just under 82%. So the common narrative perpetrated by some people who have a fairly loose relationship with the truth, unfortunately, is disproved by the numbers. Similarly, the narrative that Eskom management does not pursue preferential procurement, again, is disproved by the fact that we were able to record a 10% improvement in our preferential procurement spend as against the prior year. Again, the narrative that is out there that somehow Eskom is not in favor of doing business with small and emerging, particularly black-owned businesses, clearly comprehensively rebutted by the numbers. So I would urge members of the media to also look at the numbers rather than to lend their ears to those who have lost out on contracts due to the fact that they have engaged in illegal or unethical behavior. Next slide, please. Governance remains a huge focus area for us, and we really have to, as a nation, confront this scourge that is going to result in our country becoming, in my respectful opinion, ungovernable if we do not tackle fraud, corruption, sabotage, and other criminal conduct. A number of our power stations are in the grips of criminal syndicates. We welcome the recent steps by the Hawks. We also welcome the deployment of the South African National Defence Force to secure the assets. My only regret is that it's taken so long for our security forces and agencies to start engaging with a matter of national security, and it's a grave pity that we had to get to a position where Eskom itself, with privately funded intelligence gathering, had to assist our law enforcement agencies to investigate with a view to bringing some of these perpetrators to book. But let's hope that we've seen the turning point and that we can now arrest this tide of sabotage, corruption, and crime, particularly with regard to our generation business. We are trying to continue our campaign to bolster integrity, ethics, compliance, and governance. And we have implemented a crime risk management unit with the support of a law firm, where we will continue to do a full assessment on crime risk management within Eskom, particularly combating bribery and corruption, financial crimes, physical asset crimes, cybercrime, and money laundering crimes. And we will then be able to implement a crime risk management program to be embedded as part of Eskom's standard operating procedure. So while crime remains such a significant part of our landscape, we will have to play the role of policeman because of failures in our law enforcement to bring these perpetrators to book and to particularly conduct appropriate intelligence operations to prevent crime from happening in the first instance. We are also establishing a single investigative unit to ensure that we can achieve maximum synergies between our forensic and our security teams. And this is going to be, we think, a very important structural remedy to improving our own internal investigative capability. Next slide, please. We've also benchmarked with both local and international benchmarks, including local banks, the World Bank, and so forth, to establish a business integrity function. And we anticipate that we will be able to then remove many of the matters that relate to violations of Eskom's ethics code, as well as crimes of integrity from line management, where there's often significant conflicts of interest, as well as a reluctance by line management due to intimidation to take action against the people who are alleged to have participated in these actions. And we think that with this single integrity function, we will be able to expedite some of the long-standing disciplinary matters on matters of integrity and bring these perpetrators to book in a way that ensures accountability, but also ensures that employees who find themselves accused of these violations of our ethics codes are treated fairly, but expeditiously, so that we can exit them from the system, that they are not the recipients of full benefits while on pay for these alleged violations. We're improving our procurement systems so that we can pick up where orders are split, where we pay significantly above the market. We are going to continue to digitize our stock control using barcoding. Again, very significant internal resistance to making these changes for reasons that we can all speculate about. And we will continue to use e-auctions. But also, very importantly, we have implemented a Know Your Supplier campaign. In every corrupt relationship, there is a corruptor and a corruptee. And while many Eskom people, unfortunately, over the years have succumbed to the temptation of corruption, we also have to point a very stern finger at business, as these are the people who, in some instances, regrettably, and I'm by no means accusing all of our suppliers, but we are aware, due to recent court cases, for example, ABB, that there are businesses who have engaged in criminal acts of corruption. We will therefore be implementing this Know Your Supplier campaign to prompt business partners to do due diligence exercises, to do audits, proactively screen directors, to ensure that where we deal with men or women of straw, that we identify them up front, that we identify non-value adding intermediaries, and that we do not do business with those people, because very often they are just a front, and that they actually have nothing to do with empowerment, but they have everything to do with disguising the true intent of doing business and inflating prices at the expense, ultimately, of the electricity consumer in South Africa. So this is quite an important campaign, very similar to the well-known Know Your Client campaign run by the banks, and we feel that this is a very necessary intervention in order to ensure that our supplier base is also held to account. Next slide. I'm now going to hand over to our Chief Financial Officer, Caleb Kassem, who will take you through the audit as well as the finances before he hands back to me for a final summary right at the end. Thank you, Caleb.
Thank you, Andre. Good afternoon to everyone on the call. In terms of the audit findings for FY 2022, firstly, from a PFMA perspective, there is a qualification around irregular expenditure in terms of completeness as well as accuracy. This qualification we have added now for the last few years, and that continues in terms of addressing the issue of irregular expenditure. Further to that, it also qualifies on fruitless and wasteful expenditure, as well as losses due to criminal conduct, all linked to completeness and accuracy in terms of the PFMA and those requirements. As you will be aware, in terms of Eskom's financial situation and the material uncertainty around going concern, we are only able to continue as a going concern on the basis of the support that we've received to date from government and the continuous support that is earmarked going forward. And you will all be aware in the minister's speech the intention of a significant amount between 1/3 and 2/3 of our debt on the balance sheet that will be announced in the upcoming budget of February 2023. Further, in terms of the audit report and emphasis of matter relating to the restatement of prior year numbers, and I will touch on that shortly, as well as events after reporting date. And in addressing the report of the Zondo Commission, we have introduced a new accounting policy to deal with investigations and possible corruption. And as and when those transactions are concluded, we will then account for it in our financials. With regard to the prior year restatements, we've announced this in previous communication in terms of SENS announcements, substantially linking to a new valuation curve methodology in terms of our hedging instruments, and then that net fair value losses that's being addressed through your other comprehensive income. As indicated in the graphic below, that restatement for FY21 in terms of fair value foreign exchange loss or gain was 8.9 billion loss to the income statement. Other big restatement items revolve around the reclassification of coal inventory from current to non-current, substantially linked to coal that won't be utilized in the forthcoming 12 months. So we have now reclassified that. These changes then impact, as you will see, from 2021. Previously, you had under inventory current of 37 billion. That is now split substantially between current of 22.5 billion and non-current of 11 billion. What does this mean in terms of your financial key ratios? The current ratio is then adjusted from previously reported 1.27 to 0.95. If I touch on the PFMA and the irregular expenditure, you will see that for FY22, we started with a closing balance of 37.2 billion in 2021. Restatements as we continue addressing the historic irregular expenditure, 22 billion rand restatements, but of that 22 billion rand, there are two transactions that contribute about 19 billion of the 22 billion. One relates to a Black and Veatch transaction that goes back as far as 2006, totaling 11.7 billion. And the other one relates to fuel oil emergency procurement due to reclassification of 7.5 billion rand. What you will see as well, as contracts are irregular and continue to be incurred during the year, those historic transactions add 8.1 to irregular expenditure in FY22. New incidents and transactions that were recorded during the financial year was 300 million. I must highlight that there are a number of transactions that have been incurred in 2022 financial year that is still being assessed, and based on our historic trends, some of that will then flow through in our next reporting cycle, leaving you with a closing balance of 67.1 billion in terms of irregular expenditure. We have established a loss control department in April 2021, and in order to reduce this amount of irregular expenditures, first and foremost, in your existing current year, you don't want to be incurring any more irregular expenditure. Then you need to deal with condemnations in terms of the historic items, or remove them after taking the necessary investigations and ensuring there were no fraudulent transactions. If we move on to the next slide, touching on our financial performance for the year, Andre has highlighted substantially a lot of this without repeating. Based on your growth in your EBITDA margin from 15.9% in 2021 to 21.2%, on the back of a 15.6 tariff increase and growth in volumes as we came out of the COVID pandemic, your EBITDA grew by 20 billion year on year, from 32 billion to 52 billion, and that reflects in the improved operating profit, which grows literally 3 times from 6 billion to 20 billion year on year. And like Andre has indicated, taking into account finance charges as well as depreciation leaves Eskom year on year with the loss dropping from the restated amount of 25 billion to 12 billion. On the back of that, you can see all upward trending improvement in the key financial ratios. Just to highlight importance, the debt service cover ratio, despite increasing from 0.3 to 0.76, it's below 1, which means that Eskom's cash from operations is insufficient to cover our interest commitments and our capital commitments on our debt. And that is why we need the support in terms of government equity conditions to ensure Eskom can meet its debt service commitments. With the support of the equity that we have seen come through in this last financial year of 31.7 billion, that has contributed, together with the increased earnings, to an improvement in terms of your debt equity ratio from 2 to 1.8. And then similarly, you can see that improvement on gearing sitting at 65%. We move on to the next slide. The income statement, just to talk on primary energy, the key increase in primary energy of 15% is on the back of the performance of generation, resulting in much more expensive sources of supply being utilized in the form of our open cycle gas turbines, our diesel production. That comes at a much more higher cost, and that has resulted in an increase in primary energy year on year from 116 billion to 132 billion. You will see that from a net employee benefits expenditure, that has remained relatively flat year on year, and our other expenses have grown by 19% from 24 billion to just under 29 billion rand, substantially attributable to the growth in maintenance costs of 1.7 billion, as well as the write-off that related to Medupi Unit 4 damage. We have also taken into account Eskom's the decision from SARS to not allow for the recovery of our diesel rebates of 3.6 billion rand. So that has been adjusted in FY22's financials, and the Medupi write-off was 1.1 billion, together with 2.7 billion of provisions that were raised for compensation events attributable to the Koeberg power station. Ultimately, this culminates into that bottom line loss of 12.3 billion, down from 25 billion rand. We move on to the next slide. From a sales perspective, substantially in most categories, that has increased year on year, as I highlighted, coming off the back of the pandemic, with just a slight marginal decrease in international sales. The point I want to highlight here to our 12.3 billion rand loss, as I mentioned on the previous slide, had we been able to collect our municipal arrear debt in terms of IFRS 15, based on our inability to collect and recognize that revenue, we have not recorded in the income statement 7.7 billion rand worth of revenue. So that would have reduced your bottom line loss by that amount. We'll move on to the next slide. Just unpacking our primary energy analysis in terms of the unit costs year on year, you will see that your coal and your other costs have grown by 5% year on year. Nuclear has come down by 5%. And then on the back of oil prices, we have seen that your OCGT costs, rand per megawatt hour, has gone up by 19% year on year. That's for Eskom's diesel costs, and the ones attributable to the IPP OCGTs reflects a 28% increase. Overall, from a renewable portfolio perspective, there's been a 7% drop in terms of the rand per megawatt rate, and imports have gone up by 10%. So from an overall portfolio, 11% increase in our unit cost of production, up from 516 rand per megawatt hour to 575 rand per megawatt hour. If we move on to the next slide. Just from an investment in infrastructure, you can see that repairs and maintenance have increased for the year, up to 19.1 billion from 17.4 billion rand in the previous year. And across our value chain of generation, transmission, and distribution, there have been increases in maintenance year on year. And that remains a focus for Eskom going forward. From a capital expenditure as well, you can see that we have spent in that financial year around just 30.2 billion, up from just under 24 billion in 2021. And even in this financial year, that capital expenditure will increase based on our affordability as Eskom. Move on to the next slide. From a financial position perspective, overall, I think the key items here is that our debt on the balance sheet has dropped by just about 5 billion rand year on year, from 402 billion rand to 396 billion rand. Importantly, we have seen an increase in our liquid assets, cash and cash equivalents, from 18 billion to 33 billion, with your pure cash position at the end of the year in March 22 being 15.9 billion, an increase from the previous year's 4 billion rand. What is also important that in terms of the balance sheet, we've seen the 31.7 billion government support come through in the financial year, and importantly that to date, over the last 4 years, government has always delivered in terms of that equity support, which gives us confidence as Eskom to remain a going concern. In terms of the key ratios, as I mentioned before, your debt to equity ratio improving, and your current ratio, because of also the reclassification, that has decreased year on year. And then you can see on the back of your exchange rate changes between 2021 and 2022. We go on to the next slide. Just looking at our debt and our finance costs, I've spoken about the gross debt, and from a net debt perspective, a drop from 400 billion rand to 389 billion rand, and I've mentioned our cash position. You will see that during the course of FY22, we have repaid just under 39 billion and we raised 33 billion rand. Exchange rate movements of 3.6 billion and some other items of 4 billion rand. Important to note that in terms of our foreign denominated borrowings, that comprises about 40% of our portfolio. Our average cost of debt at around 10%, and our investment returns at just under 4%, 3.92%. And importantly, as Andre has indicated, the gross finance costs on the back of a 400 billion rand debt of 43 billion rand, taking into account finance income and borrowing costs that are capitalized, leaves you with a net 33 billion rand. And that's a key element to address in terms of Eskom's financial sustainability going forward. Moving on. Just funding for the year, a significant borrowing requirement for FY23 of 58 billion rand. To date, we've secured 40.7 billion, 70% of that. We are confident that we will achieve our funding to the end of the year. Importantly to note that a large portion of Eskom's funding is secured on the back of government guarantees. What is available to Eskom as at the end of November 2022 is 28 billion of guarantees. And in terms of our debt maturity going forward, you can see it's quite front-loaded from an Eskom perspective. 81 billion rand that needs to be repaid in this financial year. And if you just look at the trend over the next few years, averages 60 billion rand of interest as well as capital repayments on our debt portfolio. If we move on. Cash flow basically highlights that once you've taken the revenue and your operating cash flows into account, the operating surplus of 53 billion must then service your interest repayments, your debt repayments, and your capital expenditure, ultimately leaving us with debt service commitments of the last financial year of 72 billion rand, resulting in a debt service cap of 20 billion, linked to then the equity support of the 31.7 billion, it resulted then in a net cash increase for Eskom's cash flow of 11.8 billion rand. Just highlighting the importance that without the government support, Eskom will not be able to meet all its debt service commitments. If we move on to the next slide. Arrear debts, Andre has touched on it. At year end, we were sitting at a balance of 44.8 billion, a growth of 9.5 billion. But like Andre's mentioned, currently for this financial year, we're already up to 56 billion rand. This needs to be addressed through interventions of government. It's unsustainable. Eskom cannot be carrying a growth in arrear debts from municipalities of around 10 billion per annum. And I will highlight that in an upcoming slide. Over and above our municipal debt, Soweto has decreased to 4.6 billion rand after we have written off some prescribed debt as well as in duplum interest. Just to touch on other customers, customers that owe Eskom in excess of 100 million. We have Transnet of 437 million, and in electricity, the Mozambique of 579 million, of which 350 million is in dispute. If we move on to the next slide. Just reflecting segment information in terms of our three key businesses of generation, transmission, and distribution. From an EBITDA perspective, generation posted a 26 billion EBITDA, with transmission of 9 billion and distribution 13 billion rand. And then once you take into account depreciation and finance costs, you see that the loss or profit before tax for each of these segments is generation, reflecting a loss of just under 29 billion, transmission coming in at a 1.6 billion profit, and distribution at 8 billion profit. Importantly, from an asset perspective, one can appreciate majority of the assets would reside in generation of 544 billion, just under 80 billion in transmission, and 120 billion in distribution. Importantly, you will see that the 400 billion worth of debt is held at Eskom Holdings, and that is why it's not reflected or allocated across the different businesses of generation, transmission, and distribution. If we move on to the next slide. So if we take an outlook, and this is based on our September projections to year end, on the back of the declining energy availability factor and the pressure being placed on your open cycle gas turbines, as well as fuel oil utilization, we do see as Eskom that your primary energy, especially diesel spend, will grow to about 10 billion at the end of the financial year, and fuel oil of just under 9 billion rand. On the back of this year's tariff adjustment of 9.6%, what results is then a declining EBITDA margin from 21.25 to 16%, and then that flows through in terms of your operating profit dropping from 20 billion to 11 billion, and then your loss, as Andre has indicated, of 20 billion rand. I think importantly to highlight that there is, based on the MTPPS, further commitment in terms of government support for up until 2026, with 21.9 billion rand that will be allocated to FY 2023's financial year. Importantly, in terms of the upcoming decision that the regulator will have to make on the 12th of January, following the court decision, is the allocation of the 59 billion rand that was linked to the previous incorrect deduction by the regulator. And then secondly, the correction of the regulatory asset base that also has to be adjusted and complied with that court order in the upcoming decision for the next 2 financial years. So next slide, please. So if I look at it from where Eskom is sitting, unpacking all of this in terms of our financial performance and liquidity, I think 2 important items are critical for Eskom going forward. As I reflected, this 20 billion rand loss for up until forecasted for March 23, but importantly, we know that NERSA is going to make their determination that would relate to FY24 and 25. Now, what this slide highlights is that firstly, around your open cycle gas turbine cost that's allowed by NERSA and what Eskom actually spends during the year on the back of, and we acknowledge the low EAF performance, just looking at your actual gap and shortfall for March 21, there was a 3 billion rand gap in terms of OCGTs for the FY21 financial year. And in that year, in terms of what was allowed in the tariff for arrear debts of just about 1.2 billion compared to what was impaired in that financial year of 7 billion, that combination for March 21 left you a shortfall of 9.2 billion. So that 9.2 billion goes directly to your performance in the year. That's reflected in your losses that we would have posted. But more importantly, it's also a liquidity impact. I do acknowledge, in particular on diesel, there is a regulatory clearing account mechanism that allows us to recover whatever NERSA deems efficient in terms of that variance. But 2 points on that RCA recovery. One, over and above the load factor that was allowed in the regional decision, you only get that recovery not at the rate of diesel, but at the equivalent of and coal average cost rand per megawatt, which is substantially lower. And number 2, if we look at the lag between the year in which that variance was incurred and when the RCA recovery flows into Eskom's revenue in a future determination, historically that has been a 5-year lag, and as part of the RCA mechanism, it does not cater for time value of money. Taking that same principle into account for March 2022 results, we have not recovered, or we've spent 9 billion rand more on diesel compared to the NERSA determination, and similarly on your arrear debts and that impairment, another just under 8 billion rand gap, reflecting a 16.9 billion shortfall that flowed through to the income statement as well as the liquidity. Based on your September projections, at 10 billion diesel, we would be 6.6 billion short, and in the impairment, as Andre has indicated, has grown by 10 billion rand, understanding in this current financial year that there is no allowance for impairment in terms of the regulatory mechanism. So that reflects this pressure point of a shortfall of 17 billion for March 23. Now, unless through the regulatory decision, there's an allowance for much more higher recovery of diesel in the upcoming determination, Eskom will have a shortfall in terms of cash, and then ultimately we would have to resort and go back to government. We've seen in this current year how that pressure is playing out. And secondly, if there's through government, we need to find a mechanism to resolve the arrear debt. Understanding that if I take my November projections on diesel, it's probably, you can add another 4 billion to that diesel projection by year end. So that's just reflecting how that will impact in this year and going forward. So it's effectively, if you want Eskom to return to a profitable situation, if we don't address these 2 items, Eskom is going to post a significant and similar loss, not only in FY23, but in 24 and 25. We go on to the final slide. Let me hand over to Andre. Thanks.
Thank you very much, Caleb, for that overview. The mission still remains also for the new board, the management team, as well as my successor when he or she is ultimately appointed, to reposition Eskom in a rapidly evolving energy landscape, to deal with the immediate load shedding issues, predominantly by addressing the low energy availability factor from the coal fleet, to continue to combat corruption and crime, but also to ensure that we are, as a utility, an enabler of adding more generation capacity to the grid in the medium to long term. And I think we have taken some innovative steps in this regard during the past year, particularly with our land lease program. We need to recover our generation assets with our reliability maintenance program, as well as working with the initiatives under the National Energy Crisis Committee to get that additional generation capacity onto the grid as quickly as possible. We have a comprehensive implementation plan to address the findings from the Zondo Commission, and we will continue to drive civil recoveries where Eskom lost money due to unlawful activities. We will seek to recover those claims, so you should see more news flow in that regard going forward. And then we have to follow through on a sustainable reduction in our debt, and we look forward to any announcements in this regard that National Treasury and the Minister of Finance may make during the upcoming budget speech following the statements made by the Minister during the MTBPS. We have, unfortunately, a significant constraint on our system, particularly with Kusile 1, 2, and 3 out for an extended period of time. The first 2 units are expected to return towards the third quarter of calendar next year. I misspoke earlier, maybe a Freudian slip. The Medupi Unit 4 is only expected to return in August of 24, not August of next year, so apologies for that. But very importantly as well is that we will have one Coburg unit offline for the whole of next year. So that takes off 928 megawatts from the grid. So the outlook for next year is going to be very constrained. I believe that there's a significant role that each and every South African can play by treating electricity with the respect that it deserves, by using electricity sparingly, switching off unnecessary lights, ensuring that energy efficiency is adhered to, filling a kettle only with the water that you need, turning down the thermostat on your geyser, and so forth. These are simple steps that we can all take to make a significant difference to the electricity constraints facing our country. Ultimately, though, as we have been saying for the past 3 years, we need 4 to 6 gigawatts of capacity to be added to the grid. And this now really is becoming a matter of extreme urgency. And this has been brought to the attention also of the National Energy Crisis Committee, who are giving it their attention. As Caleb has pointed out, we do need a cost-reflective tariff. This is not a popular position to take for a country and consumers who are under pressure from rising impacts of the cost of living, but we have to have at least our cost of capital. Otherwise, we will not be a sustainable business, and the country ultimately has to choose. And ultimately, people have to consider whether they want to pay for users, and again, we need all users to pay, including Soweto, including those municipalities who don't pay us, or whether we are just going to divert more money from other deserving priorities, such as schools, housing, hospitals, to prop up Eskom because of non-cost reflective tariffs, and also because of the fact that we have many users of electricity. I won't call them customers because customers pay. Users of electricity who just don't pay. And some of those, of course, are government institutions, in particular municipalities. We will continue to drive cost efficiencies. We will continue to drive our own operational improvement. And ultimately, when all of these initiatives combined with a strategic restructuring of Eskom to allow more privately owned generation capacity to be added to the grid, this will enable us as a country to emerge from the electricity crisis. Thank you very much for your attention, and I'm going to hand back to Sikonati to take us through the questions. Sikonati?
Thank you for your presentation, Andre and Caleb. We are going to start with the questions immediately. Colleagues, I wish to first offer my apologies right up front. We are working from remote locations and from interesting places. So should there be any breakdown in technology, I do have my colleagues that will assist with reading the questions. Teresa will do so in the event that I'm unable to. And we have Lerato Mashinini that will also jump in to assist. So the very first question I'm going to deal with is directed at the chairman, Mpho, so that we may detain you no longer after that question. I've scanned through the others. It's from Susan Comrie of Amapungane. In fact, this is a question Susan asked during the last public engagement we had. She's reposted it. Mr. Makwana, during your previous tenure, Eskom implemented the keeping the lights on policy, which led to critical maintenance being deferred in order to avoid load shedding. With the benefit of hindsight, do you believe that that policy was a mistake? Mr. Makwana?
Thank you for that question, Sikonati. I think, Susan, the Eskom of 2010 and the Eskom of 2022 are two separate entities. The question neglects to take on board the fact that a lot has happened at Eskom in 10 years. Among others, the ravaging impact that state capture has had on Eskom. The other challenge that we face is that other priorities were pursued at the expense of the efficiencies at Eskom. Remember that Eskom historically was built in tandem with coal assets that were designed to work per power station where they were, and supply chains were disrupted. New alien coal was introduced to those power stations, and therefore all this changed the makeup of the footprint and the fleet. So I don't think that in 2022 we can, with the benefit of hindsight, look back to choices that were made in a different context, where a build program was also emerging that would have brought power sooner onto the grid in 2017 at that time than where we are now. Lots of disruptions have happened to those decisions. So I don't think we can fairly tackle that question in as clinical a manner as Susan puts it today, Sikonati.
Thank you, Mr. Makwana. There are no further questions on the chat for you now. We will not detain you any longer should you need to go, and we'll let the executive run with it. Before I get on to further questions, I'm going to ask Jan Oberholzer to come give us a power alert. And colleagues, please remember, on the 15th of November, we gave a very extensive outlook for load shedding, including what Andre has just mentioned now about the units that are offline at Kusile, the 3 units representing 2,100 megawatts, plus the Kubek units as well as BDUP 4. So that announcement or communication on November 15 is as valid today as it was back then. For the short term, Jan, please come on and talk to us, give us a power alert.
Thank you, Sugunati. To all the colleagues and everybody connected. Let's first deal with 2 days from now, Christmas. And I'm sure that is on a lot of people are thinking and waiting for Eskom to announce what is happening regarding load shedding on Christmas Day. Now, it's Eskom's intention not to have a load shedding on Christmas. And I'm repeating, it is our intention not to have load shedding. However, we will evaluate and monitor the system, up to Sunday morning, and then very early on Sunday morning, then make a decision. The current outlook, based on not having significant challenges on the system over the next day and a half, indicates that we are going to utilize a lot of the emergency. That will be water as well as diesel volumes, in order then to stick to the intention not to have load shedding for at least a large part of Christmas Day. So that is the current outlook for Christmas, that is Sunday the 25th. Now, Sigunati, there's very little else to add, but I am going to repeat a few things, the current outlook for the next month and perhaps the next 3 months. But more specifically, what is happening when the load is going to pick up in the middle of January. We are seeing quite a significant risk, make no mistake. 3 major units at Kusile, as you say, over 2,000 megawatts. And then also we need to remember that also the gas air heater fire in Kusile Unit 5, that is another 700 plus megawatts. And then as you as well as the chief executive said, nearly 1,000 megawatts at Kubek. So that gives us, nearly 4,000 megawatts, 3,500 megawatts. So it is going to be difficult. And that will mean that obviously we will have to run the existing units at a higher utilization or at the same levels as we have it now. And obviously with that comes other challenges. So we do foresee that we are going to have a challenging period over the next 3 months. I had a meeting earlier this morning with a team at Kusile, that was at 6 or 7 o'clock this morning, to have an outlook on, what is and when can we expect the units back at Kusile. Now, there are some additional challenges that we experienced yesterday, so it is really going to be a challenging situation, and it's going to take time to finalize when we can start with the work and how we can start with the work and when these units will return. So in addition to that, there's nothing else, Sugunati, that I actually can say over and above the fact that it's going to be a difficult period. Really, we see a challenging period ahead of us. Thank you.
Thank you, Jan. Colleagues, Andre started his presentation earlier with a statement on load reduction, particularly in light of the Constitutional Court decision this morning. I'm now going to read the questions here, and when I get to that, I'm going to ask Andre to repeat what he has said, please, in the beginning. So let's start with Chris Yelland of e-Publishers. He wants a comment on Soweto levels of electricity theft and non-payment and the following question also comes from Antoinette Slavet of Rapport. Regarding the unbundling, how has the debt been allocated between the three businesses? And has Eskom obtained all approval from all debt holders? And lastly, in this round, News 24, Lisa Stein, please provide an update on the effort to find funding for diesel. Has this progressed? Is Treasury willing to help? Or where might the money come from? When you answer that question, please, Andre, can you also answer Lisa's further question down there where she wants to know whether Eskom is getting a discount on the diesel that it buys from Petro SA? Thank you.
Thank you very much, Sikanati. So first of all, let me deal with Chris's question. Chris, the current overdue Soweto debt is about 4.5 billion rand, bearing in mind that as interest on the overdue debt accumulates, of course, we are prevented by law from the cumulative interest exceeding the principal. That's the so-called induplum principle, and we then have to write off debt appropriately. So we have written off some considerable debt in the past. The current payment rate for postpaid meters is sitting at about 24%. Of course, we are rolling out prepaid meters as fast as we can and as fast as the community allows us to do so. Otherwise, of course, we really struggle to install some of those prepaid meters. They are not always received with open arms by the municipalities. Chris, if I can deal with the instances of load reduction. Load reduction is a mechanism that is at the disposal of the licensed operator, which of course in this case is Eskom, to responsibly manage and also proactively deal with issues that can potentially harm the provision of a reliable and continuous supply of electricity. And it is implemented as a measure of last resort when there is significant pressure on the system. The current extended load reduction has been implemented as a means to assist the system operator to maintain the balance between supply and demand. And of course, as everybody in the country knows, we do have a supply shortage. We have tried to pull all of the levers at our disposal, open cycle gas turbines and diesel, which we are fully utilizing. We have depleted our emergency reserves. We are using our water as much as we can, bearing in mind that we have to maintain a reserve margin. And now we have to draw on the next lever, and that is to assist in maintaining the stability of the grid by the proportionate reduction on the side of demand. So like we've done elsewhere previously, so this is not a new intervention, it's new perhaps in its scale, but we have consistently for a number of years now implemented load reduction. We've identified areas that pose a disproportionately high demand on the grid infrastructure, and we've designated schedules for these areas that are fair and rotational and only last for between 2 and 2.5 hours. So when the system operator deems it fit, based on the supply situation, the demand situation, an instruction will be issued, the affected areas will be notified, and they need to refer to those schedules to know when load reduction will be implemented. We are trying to avoid overlaps of schedules between load reduction and load shedding to minimize the duration of periods when people have no electricity. However, of course, given the fact that we are now emerging from stage 6 load shedding, this cannot be avoided at certain instances and on certain days. So unfortunately, this is a situation that Eskom hasn't created, but where we have to now reduce the load in order to manage the overall demand on our system. If I can address the question on diesel, we typically get a substantial discount ranging from between 60 to 70 cents per litre off the wholesale price of diesel. So for those of you who are familiar with the structure of the diesel price, this is not the price you pay at the pump. That includes a retail margin, but there is a wholesale price, and that price is published as a guide every month by the Department of Mineral Resources and Energy, and off that price we do receive a discount. Eskom has applied for a wholesale license. If we're able to obtain this wholesale license, then Eskom would be able to buy directly from importers or import itself, and we would then be able to buy at the basic fuel price, and that would reduce the cost of buying diesel from about 23, 24 rand per litre to somewhere in the order of 16 rand a litre. So this is an application that has been with the DMRE for some time now. We've not made a huge amount of progress on that, unfortunately, but if we were able to do that, just to give you an indication, we would have saved about 3 billion rand over the past year or so, which of course is a very substantial saving that we would be very keen to deliver on. So discussions are continuing with government in this regard to enable this license to be allocated to Eskom. Signati, I hope I've answered the questions allocated to me.
Thank you, Ray. You have not responded to the one on splitting the debt between the three entities that will be created. Caleb, do you want to take that, please? Colleagues, let's say this right now again. Please ask all your questions on the chat box. It is open for the next 10 to 15 minutes. There will be no opportunity for interviews afterwards. Thank you. Caleb?
Thanks. To Antoinette's question, as I indicated in the segment report, all the debt is held at holdings level, and even in our discussions and our proposals around transmission lender consent, the principle is the debt still resides at holdings and does not move to the respective divisions. We are in terms of that mechanism looking at an intercompany loan, but more importantly, overall, it remains at Eskom Holdings, and the principle substantially is that debt should follow the amount of capital expenditure that was incurred historically around the respective divisions of generation, transmission, and distribution. So substantially, a majority of that as an intercompany loan would be in the generation business. Thanks, Hekanati. But importantly, from a contractual perspective, the debt doesn't move from Eskom Holdings. Thanks.
So in that regard then, Caleb, you don't need any approval from the bondholders because the debt doesn't move, am I correct? Or do you?
No, you still, because the debt is currently with Eskom Holdings and not NGCSA or the new distribution company or the new generation company. Thanks.
All right, before you go, do you have money for diesel? Lisa wants to know if there has been any development.
So like we've said, and I've demonstrated in the numbers, compared to what NERSA has granted us 3.7, we've already spent 14 billion for this financial year. If you look at the funding that we need to still close by the end of the year, and there was another question, a lot of that additional funding is a bit more capex, as well as dealing with the gap in not collecting from the municipalities. Like as mentioned, we have approached with our shareholder, National Treasury, to find a mechanism around funding of diesel those discussions are still ongoing. Thank you.
Thank you, Caleb. Colleagues, let me again reiterate, the chat box is open for you to type your questions, and we will proceed on that basis. The question on the load reduction to non-paying municipalities has already been addressed, so I will skip all the questions that come on that topic. Vali Padayachi wants to know, what is the non-payment of debt owing to Eskom by Eskom customers in Eskom's own areas of supply? That includes Soweto. Andre, you want to go back to that question again? Before you do, let's take Laura Gardner of Debtwire. How much progress has been made on plans for National Treasury to take over part of Eskom's debt? Which creditors have you engaged? Laura, that question has already just been answered. Andre, please talk to Eskom debt by its own customers and non-municipalities.
Yeah, typically, Vali, we are able to suspend service when one of our customers does not pay. So the payment rate for Eskom customers typically is quite good, because we are quite diligent in exercising credit control. Of course, this excludes municipalities who we supply with electricity and who in turn distribute electricity to people living in their distribution areas, from whom they are supposed to collect payment, and then they are supposed to pay what is due to Eskom. But as we've seen, that does not happen in a number of instances, and that municipal debt is now sitting at in excess of 55 billion and is increasing very, very sharply. And the latest Constitutional Court judgment, I think, may lead to a position of increasing the moral hazard for those municipalities to suspend payment. The biggest area where we do have a challenge is in Soweto, and as I've indicated earlier on, we have a payment rate of about 24% in Soweto for post-paid meters. For prepaid meters, where we can suspend supply if prepayment is not made, of course the payment is much higher. This does not include electricity theft, which is far harder to police. With other words, where illegal connections are made. This is an ongoing battle in areas like Khayelitsha, also Soweto, Elsie's River, for example. There are a number of areas where we have significant challenges in this regard. But there, our distribution teams go in from time to time, disconnect, which of course is an exercise that's not welcomed. Eskom teams who do this have to be escorted by security personnel, and they have been threatened, in some cases assaulted, stoned, and abducted even by community members who prefer to pay nothing at all for electricity. So I trust that gives you a bit of a flavor for the environment in which we operate. Sigati?
Thank you, Andre. Let's take the questions from Ray Matlaka of Daily Maverick, as well as Peter Atat Montalto. Caleb, Eskom had initially planned to secure borrowings of 44.5 billion rand during financial 2023, mainly through bond placements. Has there been changes in Eskom's borrowing requirements post the latest reporting period? Peter Atat Montalto has a comment actually. Rising municipal areas is not new. Arrears is not new. So why would National Treasury pay for it now? If so, how much of the extra would you ask for in a bailout? Similarly, if we get a lower tariff on January 12th, would you ask National Treasury to cover all the net wider debt service gap, as you call it, especially if there is going to be much lower cash levels at the end of this fiscal year? What timing guidance is there for increased bailouts if they are needed? Before you answer these questions, Caleb, please take this one from Susan Comrie as well. Can you elaborate on the 2.7 billion rand compensation claim at Quebec? I think I should allow Jan to answer that question first. But Peter, decision by NERSA will be made on 12th January, and there is no point now in speculating about that. Thank you so much. Jan, can you answer on the 2.7 billion rand compensation claim, and then we go back to Caleb.
Thank you, Sigonati. It is confirmed that we have received a number of compensation events from the contractor, the main contractor at Quebec, with the steam generator replacement project. However, all compensation events are processed as per the contract conditions and, where necessary, adjudicated to ensure fairness, for both parties. So I can also confirm that Eskom has made provision for compensation claims, many of which are still being processed as we speak. But the actual and final amount at this stage will be purely speculation. Thank you.
Thank you, Jan. Caleb?
Thanks, Sigonati. The first raised question, as I indicated, Ray, we've increased the funding for this financial year from the 44 billion to 58 billion. As I've indicated, we've already raised for 40 billion of that, and we're looking to close out the year for the final remainder. And that is on the back of, during the course of the year, with the increased need in more capex for outages for generation. That capex allocation has been increasing during this financial year. And as I mentioned earlier, not collecting 10 billion rand from the municipalities means effectively Eskom has to be a bank to municipalities. That is why the funding has gone up. If I then move on, and then also, like I've said, there is that gap in terms of diesel that we have spent, and some of that will also be linked to additional diesel where possible. If I then move on to Peter's question, I think 100% correct. Peter, we're working on the basis of the MTBPS announcement that won't only look at your debt on the balance sheet of the 400 billion, but there was also a statement around that municipal debt solution will also be looked at, and we expect announcements by National Treasury in the upcoming budget. If I link to your last question, in terms of timing, I assume of the debt relief, that is for NT to determine through the Minister of Finance. Obviously, from an Eskom perspective, we would like that sooner rather than later, preferably as a once-off, but we think National Treasury needs to manage and balance their fiscal framework. So it could be a phased approach that we wait to hear from National Treasury. Last but not least, on the upcoming tariff, if it's significantly lower, two things can only happen from an Eskom perspective. One, we will look internally, and generally one would look at its capital requirements. But if we understand the pressures in generation, the need to grow and strengthen your transmission as well as distribution, that is definitely an area we are not looking at Eskom. So we would have to ultimately then go back through the shareholder back to National Treasury and highlight the gap that we see in meeting our funding requirements to not only deliver on operational requirements for the next year, but also to embed and continue on our strategic direction going forward. So yes, ultimately it will come down to the eventual funding source is either through the electricity consumer, or then you have to approach via the taxpayer. Thank you.
Thank you, Caleb. Colleagues, I should have announced earlier on that there will be no global call, investor call after this. So I do request all stakeholders to post their questions here so they may be addressed at this point. I'm going to request that colleague who keeps raising the hand again to lower it and instead type their question. The next question is from Vali Padayachi. How much of the losses does Eskom expect to recover or claw back from the revenue clearing account going forward? Vali, I think the answer to that question really again depends on what has been granted and what the subsequent performance entails. And there is a formula to address that matter, and it cannot just be an issue of speculation. Ray Mataka again wants to know if Eskom's corporate plan is still relevant, 2022 corporate plan is still relevant, considering that Eskom exceeded its funding targets in financial year 2022 and will do so again this current financial year. The corporate plan has not been amended in line with Eskom's actual funding needs. Is the plan still reflective of Eskom's true funding needs? We have answered the question, Lisa, on the price at Petro SA. Susan Comrie wants to know from Andre Director and Caleb Kasim. A lower EAF inevitably means that Eskom burns less coal. If I'm understanding your slide correctly, a third of Eskom's coal supply will not be used in the next 12 months and hence has been reclassified as non-current assets. Is this merely an accounting change, or is Eskom now in a situation where it is forced to buy and hold or hold more coal than it needs? Andre, do you have to hold more coal than you can burn?
What this particular issue refers to is the fact that we reclassified the coal that we accumulated at Medupi because of a take-or-pay contract with the mine that supplies Medupi. And due to the delay in starting the coal burn at Medupi, we built up a significant coal stockpile at Medupi. As part of the audit activities, we have reclassified this coal from a current asset to a non-current asset because of the duration for which we have had to keep this coal. So in fact, this does not reflect on the actual consumption of coal, but more of an accounting classification with how we regard the coal that we keep at this stockpile at Medupi. Caleb, anything that you want to add to that or elaborate on?
100% correct, Andre, aligned.
Chris Yeland wants to know the average EAF for the calendar year 2022 is expected to be 58%. What do you realistically predict the EAF for calendar year 2023 to be? Mariam Issa is asking this question of Jan Oberholzer. We've never had a detailed explanation of what happened on the 16th when 8 units tripped during the previous night and early morning, pushing us to stage 6 load shedding. To your knowledge, were any of the breakdowns due to sabotage? Jan, please answer that. And can you answer the question on EAF as well?
Yeah, thank you, Sigunati. Mariam, we specifically had a very difficult night where we lost the units that you're referring to. Now, specifically, any sabotage. Now, we couldn't identify any specific acts of sabotage. However, at one of the power stations, and I'm not going to mention the name now, the power station GM has engaged myself as well as other members of management and said that technically things are suspect. So we are in the process to investigate specifically 2 units at one power station during that specific period that we tripped. So we're looking at it. But in general, Miriam, no, we just had a very difficult night, where due to unpredictability and unreliability, we have lost in a number of units. Chris, your question on realistically the EAF, it's a difficult one. You know, we have done quite a number of calculations, but the chairman has made it very clear that there's an aspiration of 65% EAF, and that is what we will strive to achieve. Now, granted, we do have Kusile 1, 2, and 3, as well as 5 that is offline, and more specifically 1, 2, and 3 that is in commercial operation. However, we trust that those units hopefully will be returned to service successfully within, or at least, you know, by the beginning of the second quarter of the calendar year of 2023. So definitely we aim to be well above the 60% EAF, but we will try our utmost to achieve the aspiration of 65. Is it possible? It's going to be difficult, make no mistake. But we've taken the challenge, but we will definitely exceed, and that is the performance that we will be chasing to be well above the 60%. Thank you.
Jan, please clarify that. Is it 65% or is it 75%? I thought the minister and the board have been talking about 75% EAF.
For next year, Sikunati, definitely there is, it's going to be, I wouldn't say impossible, but to achieve 75% by the end of next year, I don't believe it's possible at all. So we will definitely go for above 60%, well above 60%, and we will try our utmost to get to the aspiration of 65. Thank you.
Thank you, Jan. Antoinette, we've dealt with the load reduction question. Rene Volker from Bloomberg News. It's a question for Caleb Kassam. What is the breakdown between capital payments and interest payment out of the 81 billion rand debt service payment for financial 2023 that you spoke about, Caleb? And Stella Cridge also has a question for you. She's from Barclays Research. How does Eskom plan to repay the US dollar bond maturing in 2023? Does Eskom plan to issue any more US dollar bonds during 2023? Thank you, Caleb.
Thanks, Sikunati. The split of the 81 billion commitments for the next financial year, 33 billion is interest and capital is 48 billion. In terms of the 23 maturities, that will be part of our funding program, and we will decide what is the most optimal mechanism. Obviously, our outlook for the next few years is also part of the discussions that we're having with National Treasury in terms of debt relief solution. So at this point in time, there's nothing firmed up. Thank you.
Thank you, Caleb. Andre, I'm just going to read this comment from Mohammed. He is from the city of Matlosana. He says, I'll just read the last half. Load reduction when combined with load shedding has been for up to 8 hours in a continuous stretch, not 2.5 hours, as experienced in the city of Matlosana. Since load reduction was implemented this week, there's been no communication on the matter or any schedules. Am I correct? You did say that will be rectified soon. Andre?
Yes, Sikunati, that is the plan, that we will improve communication in that regard to enable people to plan to the extent that they can. We, of course, recognize that this is an inconvenience, but as I explained, this is within the remit of the system operator to implement measures to protect the stability of the grid, particularly in areas where there's high usage and a high degree of illegal connections or non-payment. Thanks.
Thank you, Andre. To answer Stephen Krill's question, Caleb, can you just tell us, please, what part of the, or how much of the government guarantee is still available, or debt that has not yet been raised? Because he wants to know how much of that 58.5 billion rand during this current financial year will not require government guarantees. And what is the forecast of Eskom's cash balance at the end of March 2023? Can you answer that, please, Caleb?
Thanks. We have 28 billion rand of government guarantees available for us. As part of closing out the 58 billion rand, we will utilize a portion of that. In terms of our year-end cash balance, first and foremost, there will be a positive balance, but because of the many moving parts in terms of costs, we can't, as I sit here today, tell you the exact number. I guess with the tight system and the challenges we had this financial year, I think it'll be a much lower number than where we were at March 2022 or 15 billion. I would say then single-digit cash balance. Thank you.
Thank you, Caleb. Andre, this question from Clyde Mellinson I will direct to you. You said in a recent Future Outlook presentations, well, Eskom said, unconstrained modeling undertaken by Eskom indicates expenditure of more than 60 billion rand on diesel over the next 12 months. And in a footnote, it is stated that this is neither logistically nor financially feasible. And therefore, the outlook on load shedding stages should be increased. Could Eskom provide guidance on how capped diesel usage would in fact increase the severity of load shedding? Is the question clear to you, or Sekhomotso? Can you assist here?
Yeah, let me have a stab at that. So we have two open cycle gas turbine sites, the one at Gerikwa, the other one at Ankerlig, close to Saldanha. Now at Gerikwa, we have no logistics 24/7 basis, and that's enough to give us about 700 megawatts of generation capacity. At Ankerlig, the situation is different because the plant was designed initially to be only a peaker. In other words, only to operate as a measure to alleviate the demand during peak hours. The plant can run with the available logistics hours per day. If we run it for more than that, then we deplete the tanks at such a rate that we are unable to replenish diesel in the tanks, and we therefore have to restrict the use of our plant at Ankerlig at full capacity, to be sure, for 3 hours a day. Now, this doesn't mean that, of course, we can run some units at Ankerlig for longer periods of time, but this is at full capacity utilization, about 1100 megawatts. So this is the logistics constraint that we've got, even if we did in terms of the cash flow to purchase diesel from our suppliers. I trust that has answered that question. Jan, I don't know if you want to add anything to that, or is that more or less in the ballpark?
I think nothing else to add. Thank you, Andre. Logistically, spending 60 billion is just not possible. Thank you.
Thank you, colleagues. We closed the chat 3 minutes ago, and we, of course, only had the last question from Alex. Alex, please do pardon me. I'm not going to attempt pronouncing your name. You are from City Research. You are following up on the debt transfer question. In your conversation with National Treasury, could there be any conditionality attached to the debt transfer, especially if the debt transfer happens over time and not as a one-off transaction? That is your question, Caleb. I'm going to invite, though, just after you've answered that question, I'm going to invite Karen Pillay to answer the security-related question from Banele Gininza of Business Report. Banele is the colleague who has an interesting relationship with the chat box there. He wants to know if what does Eskom commit to the National Defence Force? This is with regards to the deployment of the army at some of our power stations. And he says there's a Sakeliga matter, supposedly before the courts. Banele, you sound like you're speculating here, so I'm not going to help you on that one. He wants to know if there has been a formal challenge and what is Eskom's response to the taunts. Can you just give us any information, if at all, Karen, on the security arrangement with the National Defence Force? If they will be going to any other power stations in addition to the 4 that have been previously announced? Please come in after Caleb, and that will be the last question we deal with in this round. Thank you.
Thanks, Sekonati. To Alex's question, National Treasury have indicated that with regard to the debt relief, there will be conditions that Eskom would have to comply with. Obviously, they are still busy with that, and they will engage with the Eskom. From our perspective, in our discussions with National Treasury and our shareholder ministry, it's important that those conditions are also practical, that Eskom is able to then benefit from the debt solution. If the conditions are too stringent to achieve, then we're back where we find ourselves. Thank you.
Karen, please come in.
Nati, and good afternoon to everyone on the platform. Just in terms of the SANDF deployment, certainly we have received deployment at 6 of our power stations, and in essence we are seeing varying numbers being deployed. So currently we are reporting deployment at Grootvlei, Kendal, Duva, Camden, Creel and Tutuka power stations. We are in discussions with the SANDF to just firm up in terms of the threat information as well as risk exposure for the various sites, including the identification of crime hotspots for Eskom, and the SANDF will determine the deployment that will be filtered through to Eskom. Thank you.
Thank you, Karen, and thank you to everybody, all of you colleagues, for attending this media briefing on a Friday afternoon, just before Christmas. I'm going to request Andre Durete to give us his closing remarks. And as I did indicate earlier, colleagues, there is no opportunity for interviews. I will post the link, the recording to this conversation as soon as it is downloaded, and it will be emailed to everybody. Please use this for all your broadcasting requirements. Thank you again for your cooperation the whole year, and travel safely to your destinations. Andre, closing remarks, please.
Yeah, thank you very much, Sekonati. Thank you to everybody on the call. Thank you to members of the media for your continued interest in Eskom and your willingness, your eagerness to hold us to account. I think you've done a fine job over the past year. Also, thank you very much to our lenders and members of the financial community for your support and your engagements. We really look forward to continuing those engagements in the new year, particularly as we await with you the expected announcement in the budget during February from the Minister of Finance, and try to digest what the ramifications of that will be for Eskom and Eskom's debt. We wish you a very happy holiday season. If you do travel, please be safe. look after your own safety and that of your families. Forward to again engaging with you in the new year. And I would not be doing my duty if I did not request you to please use electricity sparingly, switch off all unnecessary appliances. Let's work together to keep this a Christmas where the lights are on. Thank you very much and good afternoon.
you.